Good morning. Well, it's Wednesday, October 20. I'm Tom Elliott. Welcome to my market report. Quite a momentous couple of days around the world's exchanges. Now, internationally, the Chinese central bank took the rather unusual step last night. It increased interest rates. Now, this was taken as a bad sign in the American markets, and most of the indices there fell around about 1.5%. Of course, the reason the Chinese authorities have done this is because they're worried about their economy growing too fast. And really that's good news for the Australian economy because it means that China is going to continue to consume a lot of the raw materials that we export. Anyway, our market is also down at 1.3% this morning, which is unsurprising because we usually do track the US markets pretty closely. Now, perhaps of more interest than the day-to-day movements of the stock market is some big corporate action that's occurred in the past few days. Now, firstly, last night there was a raid on the register of Channel 10. We were rung up and see if we wanted to sell some of our Channel 10 shares. I had to think about who the buyer could be, and I guessed it was James Packer, and sure enough, that's who it is. Now, Packer sold out of Channel 9 2 years ago, and as a result, he's free to buy into 10. He's not withheld by the media ownership laws. Different theories about why indeed Packer has done this. Probably the best one is that with his stake in Foxtel, which he owns via Consolidated Media, and having Channel 10, it gives them a sort of a joint pay TV and free-to-air TV ability to bid for the AFL football rights, which are coming up for renegotiation soon. So an interesting media play. Many people, myself included, thought that Packer was pretty much out of media, but with this purchase of, at the moment, 16% of Channel 10, he is well and truly back in. Other corporate activity which is of interest, Tabcorp has decided to demerge. Now, obviously it's a gambling company, but they're going to separate the casinos business, which is the casinos in Sydney and Brisbane, from what they call the wagering business, which is the various gambling activities that revolve around horse racing. Tabcorp in 2012 will lose its pokies business thanks to the rather capricious actions of the Victorian government. Now the stock is still on a trading hold. It's probably a good thing for Tabcorp, and tied up with James Packer, when it does demerge, the Crown organisation, of which Packer is the major shareholder, he owns 43%, may look to make a takeover for the casino part of the Tabcorp business. So that's something to look out for there. For Telstra shareholders, more bad news overnight. Now the Future Fund, which still holds almost 11% of Telstra, it turns out has been selling down that stake over the past several days, and it's sold about 1.1%, 114 million shares. As a result, Telstra's share price hit a new low this morning of just $2.60. The stock has a very, very high yield at the moment, but many people question how long it can keep paying the sorts of dividends that it has paid for the last few years. And in news from Perpetual, now KKR, which is a very aggressive US private equity firm, in fact, actually, it was the group, I believe, that bought the Channel 9 organisation from James Packer some years ago, so Packer's name keeps coming up at the moment. It's made a bid for the wealth manager Perpetual. The bid's pitched between $38 and $40 a share. Perpetual shares are trading at around $36.50. Some people think the board will recommend against the bid and try and find another buyer. And perhaps an obvious buyer might be National Australia Bank, who's been stymied in its efforts to buy AXA by the ACCC. No one's really sure whether the ACCC would allow the NAB or indeed any other bank to bid for Perpetual, but Perpetual is well and truly in play. Finally, the $8. Now, there's a lot of talk recently. Would it go to parity? Well, I can tell you with this sell-off in the stock market last night, the US dollar was bought back up. And as a result, our dollar has fallen to just under 97 cents this morning. My recommendation for people looking to buy things on the internet or travel overseas or do whatever is take advantage of the strong dollar while it is strong. When everybody says, oh, it's definitely going up, it's definitely going to parity, and then it will go to $1.10, that is what we call in the markets a crowded trade. That is, everybody's agreeing the same thing. And that means there's no one to push it that much further. My feeling is that we might have seen the dollar as strong as it's going to be. And we only have to cast our minds back to mid-2008 when the dollar previously hit around 98 cents. By October of that year, that is just 4 months later, it had fallen to 63 cents US. So it had lost a dramatic amount of value, almost 35%. So take advantage of a strong dollar while it's strong, because who knows how long it will last.